Welcome back to Synaptic Dividends. Today, we're putting a true heavyweight of the financial world, S&P Global, right under the microscope.
We're here to answer one simple question by looking at the hard numbers. Is this company's dividend really the income fortress that its reputation suggests? Let's dive in and see what the data tells us. All right, for any dividend investor, you know the first and most important question is always about safety. Can the company actually afford the dividend it's paying out? Well, we have the perfect tool to measure this. We're going to look at the free cash flow payout ratio. Now, that sounds a little technical, but all it really means is we're checking what percentage of the company's actual cold, hard cash profits are being used to pay that dividend. Forget the accounting tricks, This is the most honest measure of affordability you can find. And for S&P Global, get this, that number is just 20.8%. That is incredibly low. Think about it. For every dollar of cash profit they earn, less than 21 cents is needed to pay shareholders. That leaves a massive cushion, which means this dividend is exceptionally secure. So we know the dividend is safe. That's a huge check mark. But a great dividend investment also needs to grow, right? So let's see how S&P Global stacks up when it comes to its history of rewarding shareholders. And wow, what a history it is. S&P Global has increased its dividend for 53 consecutive years. That doesn't just make it a dividend aristocrat. That puts it in the super elite club of Dividend Kings. This kind of consistency is just so rare, and it signals a remarkably durable business. But look, longevity is only half the story. The power of that growth is even more impressive. As you can see, the dividend has been compounding at over 12% annually for the last decade. That's the kind of powerful double-digit growth that can really turn a small yield into a serious income stream over time. Okay, so the dividend is safe and it's growing fast. But what happens when the world goes sideways? The ultimate stress test for any dividend is how it performs during a major economic crisis. And this is where S&P Global really proves its strength. I mean, during the great financial crisis of 2008, when other companies were just collapsing, they raised the dividend. During the 2020 pandemic, they hit the accelerator with a massive 17.5% increase. It's because their data and ratings are so embedded in the financial system, they act like a toll booth on the economy, collecting fees even in a storm. They don't just survive crises, they actually thrive.
So, we've looked at safety, we've looked at growth, and we've looked at resilience. Let's put it all together and deliver the final verdict.
When you put it all together, the picture is incredibly clear. The dividend isn't just safe, it's fortified by that super low payout ratio. It isn't just growing, it's compounding at a double-digit rate. And it isn't just consistent, it's proven to accelerate even in a crisis.
The numbers don't lie. S&P Global's dividend isn't just a number on a page. It's a fortress of income that has proven itself to be safe, fast-growing, and absolutely battle-tested through the worst economic storms. If you want to go deeper and understand the full business model, the competitive advantages, and the management behind these numbers, check out our long-form analyses on our main channel, Synaptic Investing.